Let's talk about the latest strategy report coming in from Neelkanth Mishra of Credit Suisse. Needs no introduction. He has been writing about COVID cases, what is the impact on the economy. He also earlier wrote by stating that the cases will tend to go up. This is of course the second wave that you are seeing, but at the same time they also said that it will increase quite once the recovery happens. The recovery will also be as fast as it was. And secondly, he also clearly pointed out that the base case continues to be that there will be no major lockdowns as far as whole of India is concerned, but they believe that yes, there will be certain areas where there could be lockdown, but that will have a limited 4-5% impact as far as GDP is concerned. So he's written about the second wave once again, and he starts by saying that there is a rapid rise in the second wave. It means that more number of rapid fall as well, which will come ahead, and that according to them makes them believe that we continue to believe that it's an accumulate on dips in terms of an Indian market. They estimate the population of antibodies to increase quite sharply, and that is also one of the key reasons why they believe that one should start to look at the markets on the positive side. What they are saying is that the COVID cases have already surpassed the previous peak with more than 70-80% in terms of the entire number, but they believe that this time around the concentration is pretty high, which means that there are select states which are seeing this spread, and they believe that that is something which makes them believe that this is spreading in faster. This is maybe the new mutation as well, and the concentration is higher, but the pace at which it is increasing is pretty high. That's what they are saying, and that means it will create further herd immunity. That means once the recovery rate starts to increase, because COVID will peak out according to them as well, the recovery rate will also be pretty high, which means that the recovery rate will be much faster, much sharper than what essentially people had thought earlier. Now in terms of markets continue to believe that lockdowns is probably the key thing that is looking at, or that is something which is creating a panic as far as the market goes. But they believe that activity restriction is unlikely going to be very meaningful, except for select blocks as it had been the case earlier. So they believe that activity will continue to go on, majority of the activity will go on. And for comparison, if say September 2020, which is prior to the active cases, less than 5% GDP or 5% of the GDP actually maybe go ahead and restricted. And also another important point that one must note that they're pointing out is that recently there have been vaccine approvals which have come in. Currently India has approved almost 3 vaccines which have come in so far. So the vaccination rate will also tend to pick up, and that itself will also spread the virus coming in further. What they are telling their client that given a steep correction in the market, they would remain buyer. They would recommend their clients to go ahead and accumulate on dips. That is their base case scenario, that the activity restriction may not be as high as what it was earlier. In fact, it may only be just about 5-6% of the GDP, and that according to them doesn't really change much. And more importantly, we know about the virus. There is a playbook which is there about the virus, and there is a mass vaccination which is going on, which according to them will also tend to pick up, and that's why accumulate on dips is the strategy.